Good evening to all of you. I welcome you all to this webinar. We have been receiving a lot of inquiries on FATCA and CRS regulations and therefore decided to do a webinar for all our members. ANMI in association with Kaytes brings to you a webinar on FATCA and CRS regulations. Today, Mr. Karia will be covering FATCA and CRS regulations and shall also update us on the said regulation. Mr. Karia is a chartered accountant specializing in financial services and offshore and domestic funds. Mr. Karia specializes in fund regulatory and tax compliance, international taxation, tax due diligence, FATCA and CRS regulations. May I now request Mr. Karia, founder partner, Kaytes Business Consultant LLP, to speak to our members on FATCA and CRS regulations and also update with the latest regulations that have taken place. We will hear Mr. Karia, and thereafter the session would be followed by a Q&A session. Over to you, Mr. Karia.
Thank you, Mr. Maheshwari.
Yeah.
Namaskar to all my friends and colleagues there. For people in Mumbai, I'm not a new face. I've seen you all, met you all in person. I've been there at ANMI for about 3 sessions before this, so 3 years prior to this. And I hope this time I'm able to connect to a larger audience where ANMI is connected. So my pleasure to be here again, and thank you to ANMI for inviting me here, having me again. This is my home turf. I started my career as a chartered accountant at the National Stock Exchange. So very much emotionally, as well as all my technical skills, they began from this ground itself. So very glad to be here and present this to you. Without me wasting much time, quickly to introduce, my name is Kriyang again. My firm, Kaytes, is a 2.5-year-old firm. I was with Big 4 entities before this into financial services stream. And of course, we do a lot of FATCA CRS related work right from the inception from 2013. I have a short presentation, which I would like to begin with. And of course, we'll take question and answers after that. I hope this is visible. So first of all, from basics, a quick refresher on what is FATCA and CRS. FATCA and CRS is an information exchange regulation where financial institutions like brokers, custodians, PMS, alternate investment funds, life insurance companies, banks, and certain NBFCs are required to delve with information in relation to non-resident individuals and certain entities, Indian or otherwise, along with their beneficial owners who are reportable. So obviously there is a need for an additional due diligence or KYC, as you may call it, to identify whether your account, your client is reportable or not. Typically, an investment advisor and manager are exempt because they only manage funds. They do not hold monies or trade on behalf of their clients, and they do not hold any funds at all or any securities on behalf of their clients. So they are exempt. This is a calendar year reporting again. So we are talking about 2019 calendar year reporting, which is due originally by 31st of May, extended to 30th of June this year. As discussed, there's an additional due diligence procedure which is required, and how it is to be done is prescribed under the relevant regulations. The easiest way to go through the regulations is the guidance note of November 2016. To identify whether your clients or your accounts are reportable or not, you need to do incremental KYC, ask additional questions, and the best way to have this have these answers is obtain an additional FATCA CRS form differently for individuals and non-individuals. So for non-individuals, there's a lengthier form. You would have already seen and already know about it. Going a little further from the basics, what you need to do, all new accounts. New accounts would mean all accounts which are opened on or after 1st of July 2014 are required to be remediated, in the sense that you need to have FATCA CRS declarations collected from all the new accounts. The reason is that the law is applicable from 1st July 2014. The law had given some additional timelines for accounts which were opened between 1st July 2014 and 10th of August 2015, because it was a retrospective law which came only in 2015. So additional time until 31st December 2016 was given to certain accounts, wherein you can go back to your customers, clients, and obtain the FATCA CRS forms. The law says that if you do not receive the declaration from these accounts, from the new accounts, then you may block them. And obviously, if you have any iota of doubt whether they are, if they are non-residents or they fall under the reportable category, you can also report them with the limited data you have. There were some thresholds prescribed under FATCA for pre-existing depository accounts, in the sense DP participants. It is not applicable to brokers, but these thresholds are not applicable or not available under CRS. So our suggestion has always been that you do not follow any thresholds for reporting, and you report even 1 rupee of account holding, or even nil for that matter. We discussed that the reporting deadline this year is 30th of June 2019. So before going into specifics and some recent issues, quickly why this particular law is so important. It is an exchange of information law. That means that the financial institutions give certain information to the CBDT in relation to 167 countries plus the US. The CBDT sends this information to the respective countries for all the accounts that were reported. And all these countries give back information to India in relation to Indian tax residents who are outside but are required to report their income in India. So Indian tax authorities get a valuable information of non-compliance by certain individuals who are required to report their income and pay taxes in India, but they are not doing so right now. So when they file their return of income in India, the income tax authorities reconcile the FATCA CRS data received from other countries with their income tax returns. If there is any discrepancy, they send out a notice. And therefore, it is a very, very important law for the tax authorities to obviously avoid any, to check on any misreporting, underreporting, or even tax avoidance for that matter. So why brokers and custodians? I believe the majority of the crowd here is brokers and custodians, or only brokers, and some may be PMS. So we will cover a small slide on PMS as well. Why brokers and custodians, and what are you required to report? Brokers trade on behalf of their clients, and depository participants hold securities on behalf of their clients. Both this information is very important for the tax authorities to be reported back to the respective countries. So the brokers are required to report the gross sale turnover. So only sales, the sales side for the calendar year, plus any ledger balances which are there at the end of the year, as on 31st of December each year. It is required to be reported annually. For DP, the ledger balances will be added with the value of the stocks, securities lying in the depository, the demat account, as on 31st of December. So these three information obviously required to be reported. We are also learning from the process that CDSL is making available all the dividend related information also on request. There was a circular which was quoted recently by someone in our last conversation. So if you have information in relation to the dividend also, which is being paid to that client during that calendar year, you are required to collect that information and report. Similarly, you may have interest related information, which may also be reported. Moving ahead from the basics, some important updates. So how do you proceed on FATCA CRS compliance? There are two registrations required. One is called as JIN and the other is called as ITD-REIN. JIN is in relation to the US regulation, which is from the IRS, Internal Revenue Service. This is required to be obtained first, and then you obtain the local registration, which is called as Income Tax Department Reporting Entity Identification Number, ITD-REIN. This identification number will allow you to report 61B form on an annual basis from the PAN of the designated director. Okay, so the designated director who actually signs the returns, from his PAN and password, these reports are required to be filed. Now, when you obtain ITD-REN, there is a column which asks for JIN. That means you have to get your JIN first and get your JIN linked to ITD-REN when you apply for ITD-REN. If you haven't done so and if you filed the return, because many of them you would have taken the ITD-REN first and then realized, oh, I need to obtain JIN as well. You may face an error which is thrown out after you file the return. It will say JIN mismatch. You'll have to wait because they then will reconcile the JIN with the IRS website. And then it will be processed as accepted, not before that. After you do the due diligence and fill in all the data in 61B, you are required to generate an XML through the utility, sign the form using the GSU, the generic submission utility, and file it. Once you file, it is processed like your 143(1) income tax intimation. After it is processed electronically, a data quality report is generated every year. It is suggested that you please download the DQR and check if there is any error which is required for you to correct and file a revised return. The easiest way to find out is go to the bottom of DQR once you download the PDF and see if there are any report requiring corrections numbers given. If the number is 0, then there is nothing to be checked or corrected. But there may be some exceptions which are thrown in the report, which you can correct in your next file. So if there is some data quality which is not up to the mark, which will be thrown. Your return is accepted if RRC is 0. But if it is, if it still shows some data which is not correctly filled, for example, it may be PAN not provided, or your phone number is not correct, or it may be date of birth format incorrect. It could be anything. So you need to make sure that when you file your next report, all this quality checks are done in relation to these accounts, and then you file. This also means that you need to see how strong is your data. Do you have place of birth, country of birth as an information? Do you have TIN in place, tax identification number of the home country of your client? Do you have date of birth in your system already available, or do you need to go and dig down the KYC form? Do you have father's name or spouse name available? Mandatory data again. Do you have the entire address, or do you have both addresses? Which one do you pick? If you have the overseas address and the Indian address both, if you have the overseas address should be mentioned. So all these are data points that you need to take care of when you file the return. Now, recently, many institutions have received notices saying you have not provided TIN for nationals which are not Indians. So if the nationality column is other than Indian, and you have not provided their home country tax identification number, you might face a notice and you will be required to provide that. You will have to collect that, correct your return, and submit it again in response to that notice. Similarly, there are other matters in which they can come back to you saying your amount column is not matching. You have not totaled up the other credits also. That can be part of DQR or through notice. It can be any way, you may be asked to correct. Now, why this data point and all this information is important? Because India obviously is under FATF, is one of the FATF compliant country. We are expecting an FATF review this year. I don't know if it will be pushed further or not. But if it happens, there'll be a lot of pressure on the income tax department to prove that they're doing things right. And obviously, in turn, they will issue notices to, to call for information from the financial institutions as to what they are collecting. Now, from FATF perspective, the most important data is in relation to the sanctions test that you would have done. And for that, whether you have appropriately collected the beneficial owners data also. Why it is important from FATCA CRS perspective? An Indian entity, which is a passive entity, that means majority of its income comes from rent, royalty, interest, dividend, etc., is a passive entity. And their beneficial owners, for company it is 25% threshold, and for others it is 15% as per AML. Same applies here also. If they are non-residents, then the entity and the beneficial owners are required to be reported. Now, if the beneficial owners are two, US and suppose UK, then there will be two reports required to be filed. Under FATCA, the entity name and the US beneficial owner will go. And under the CRS file, the entity name and the UK beneficial owner will have to be reported. So this also becomes important from the FATF perspective. And in the past, we have seen that whenever there has been a review on this front, notices has been issued to the institutions. How can you do your corrections? So it is possible that you would have made some errors, and very few have actually resorted to this particular window. It is possible that you have made mistakes. It's possible that you've missed out on reporting. It is possible that you have additionally reported something which you were not supposed to report. So you can obviously go and sumo to correct it. You can correct your files pursuant to a notice, as we just discussed, or pursuant to the correction required under DQR. So all these three avenues are available with you to correct your files. You can obviously go and delete your record also. There's a separate process for that. The process note is already available under report.inside.gov.in. You can also include additional file when you correct. So if you're missed out on any reporting, you can obviously include that. You have to correct it until your RRC is 0. Report requiring correction under the DQR is 0. And each time you correct, your original statement ID is required. So why I'm coming to this is that the question is, can you correct your nil return? Answer is yes. There's an original statement ID given there, and you can always go and correct it. But if you have filed only preliminary response, you cannot do anything about it. It will be considered as fresh return for all purposes. You can also correct your past returns. For example, if you have, you can go back to 2016 and 17 also to correct those returns anytime. Until now, there's no window or no timeline given as to until what time you can keep correcting your returns. If you have filed your nil returns and you have something reportable, but you haven't corrected it, the penalty is 50,000 rupees for misreporting. If you haven't reported anything and if you have only filed your preliminary response, until you corrected, the penalty is 100 rupees per day. But if the officer finds out that you have not corrected, if you have not filed the returns, then the penalty is 500 rupees per day. Okay. So there are obviously penalties for non-reporting and misreporting both under the law. So there are some myths which, there are people assume that this is okay to do. And I've covered a few here. There is a myth that I have only resident account holders, and therefore I am not required to do any FATCA CRS compliance. First of all, if you have only resident account holders and you have found this out after due diligence, you are still required to file a nil report. If you have not done the due diligence, and especially in relation to your entity accounts, where there is more likely that you will find a reportable account, then you are in trouble. That also means that you cannot absolve yourself from the due diligence process, which is a continuous process, risk grading process. I'll give you one example. I'm sitting here in front of you. I'm in India. Tomorrow I'm employed in the US. In 182 days, my status changes to a non-resident. Unless you do a re-KYC or a periodic due diligence, you will not know whether I'm reportable or not. And two, from SEBI's perspective also, you are serving a non-resident as if I'm a resident, which is a problem. So it is a two-pronged benefit if you do it right. The second myth is all Indian registered entities are not reportable. You have a private limited company and the company tells you in the form that I am an Indian resident because I'm incorporated in India and I'm not reportable. Absolutely wrong. Unless you go deep down, you will not know. We spoke about this before. An entity which is a passive entity, and if their controlling persons are US or any other country, and they meet the AML threshold of 25% or 15%, both the entity and the reportable account are required to be included in the statement. Re-KYC is not mandated. Now, re-KYC is something in relation to your risk profiling within the entity. It is not something that may be prescribed. We just discussed an example about myself, of what my status being changed because of my employment. So you may have seafarers account. A seafarers account is the most riskiest account because its status changes every year. 1 year it may be reportable, the other year it will not be reportable, and next year again will be reportable. So that comes into your top list for re-KYC. If you know that a particular entity is a passive entity, right now their beneficial owners are resident. Their status may change anytime. That's your second. If you have any financial institutions which you are holding account for example, anybody is serving Bank of Maharashtra as their client, you need to see whether Bank of Maharashtra is complying or not, and that can be done through GIN, GIIN. Whether their GIN is active or not, that is also a re-KYC, because if it is not active, they become reportable. Financial institutions held as an account by any other financial institution which is not complying is required to be reported. So if a broker has an account of Bank of Maharashtra and Bank of Maharashtra stops complying, then the broker is required to report Bank of Maharashtra account. Preliminary response is sufficient for nil report. Disagree, because it is not a report. It is only a precursor to your report. We discuss about this. You will not get a statement ID for filing a preliminary response, and definitely it will not be considered as actual filing. Declaration collected is sufficient compliance. It sounds weird, but only collecting declaration, it does not end there. You need to see if you have received the declaration in the right format. All the information is there. If the client has understood the form correctly, he has filled in all the details, you have all the details to identify whether the account is reportable or not. Then your process is complete. And obviously, then we again go to re-KYC. So these are the small assumptions that people have kept in relation to this compliance, and they've continued to do what they're doing. So just thought of covering these. Quickly, for portfolio managers, will not waste much of the time here. This is my last slide, and I will want to spend more time on Q&A. So if you're a PMS within the same entity, you need a separate ITDRN under investment entity category. What will you report? If there is nothing to report, you will file a nil report. But if you are pooling monies on behalf of non-residents, you are required to report the pooled money. Typically, a PMS invests its extra money, its treasury activity, into mutual funds. These mutual funds are pooled by the PMS in its own demat account and held on behalf of the non-residents. In this case, the pooled mutual fund units, the value, and any payments thereof are required to be reported in relation to all the non-resident accounts held by the PMS each year. Obviously, there'll be allocation basis, how much they hold. Year-end balances and allocation, as we just discussed. The same procedure for you: register, do the due diligence, and report. We discussed this. The category of FI will be investment entity. Even if you have the PMS license in the same entity, you require a separate ITD-REIN because your category of financial institution is different. I end my presentation here and open up for questions. Thank you. So, sir, how am I supposed to take the questions? You tell me, sir.
1 minute. 1 minute. I just got. Just 1 minute. अरे साथ स्क्रीन निकल गया.
Hi, any problem?
Yeah, no, just 1 minute. Let me look into the questions and then.
No questions.
Hello.
Yeah.
I don't see any questions that have been received from any of the participants who have logged in. So the one question that I myself had, if I am holding a PIS account of a NRI and that NRI is trading through a broker, that means I will have to report his transaction also on FATCA?
Yes.
I will have to do that.
Yes.
Okay. And this, as you said, this can be corrected in case I have not done this, then it can be corrected at any time at my will.
That's
the
right.
moment I come to know.
That's right.
All right.
That's right.
Are there any questions from the participant? Hello. Let me see if there are any questions. No, I don't see any questions. Mr. Karve.
Okay, so I don't know if the YouTube chat, I think, has a provision for you to ask questions. If you have no questions, I'm very glad. And technically, if you have anything, I will allow ANMI to share my slide deck with you all. It will have my email ID.
Yeah.
You can always write back to me for anything. Expect some delay in response because we are also coping with timelines. But I will try and answer all of your questions. If they are too technical or requires an engagement, I will definitely let you know. So we'll wait for 2 minutes and maybe we can wind this up. Not a problem.
Yeah, we will wait for 2 minutes if there are any questions. Yeah, there is a question that. Whether FATCA declaration is required to be collected from the client every year? What if client doesn't submit any annual declaration?
It is not about every year. We spoke about risk profiling.
Okay.
And you may categorize certain clients of yours as highly risky, and therefore you can collect only from those in a yearly basis. But once in 2 years is definitely is a good practice. So here it is very important to understand that it's not a very difficult process. As a broker, you are connected with your clients on phone, on emails, and also you may have a trading window. So you can use all these 3 platforms to collect this information. A hard copy, scanned copy is not necessary. You can have a Google form, OTP based form, or a trading window based form, or an email form. Everything is acceptable in terms of declaration. Is FATCA going to be part of AR?
Yeah, is FATCA going to be?
What is AR? I'm not able to understand the acronyms here. Okay, I'll take the next question until then. Can we file FATCA and CRS now? While preparing data for FATCA and CRS, what points should be considered, kept in mind? Okay. We discussed the process. Most important is for you to identify whether your account or clients are reportable or not. And have your registrations in place. Do the due diligence right. Even if you have made some mistakes while filing the first time, you can always go and correct it. And my experience is that you will over time improve your data. It is not going to happen in a year. So you need to start that process of collecting proper data and maintaining the records from today. And within 3 years or 4 years down the line, you will have all your accounts remediated, is what my experience is with other clients. What if mistakes found in filed in reports? What are the consequences in case of any default? So if you have made mistakes and if you have suo motu corrected it, there is no challenge. If you have made mistakes and there is a notice and a DQR in response to that, you file your returns, there is no problem, no penalty. But if you have not filed anything, then there's a penalty, which we discussed during the session. Okay, we notice FATCA forms in different formats and it is adding to confusion. Is it okay if we take simple declaration that, no, that will not be sufficient in my view. I will tell you why. US FATCA, it says green card holder, US tax residents, US citizens are required to be reported under FATCA. But for CRS, only non-residents other than in the US are required to be reported. The form asks you these questions. If you only say I'm a resident or non-resident, not sufficient. Why a US citizen working in India and is an Indian tax resident, you will not report him because he is an Indian tax resident by definition or by what declaration you will collect. But by law, because he's a US citizen, he's required to be reported. And for entity, the form is definitely very confusing, very lengthy, but that is what it is. You are required to collect so much information to make sure that you have sufficient data to identify whether they are reportable or not. Is it okay if we take simple in corporate? We have seen single sheet form to, okay, the single sheet form will not serve you any purpose for corporate declarations. Please scrap it and use the 10 to 12 sheet form, which in my view is self-explanatory and comprehensive to tell you what you should do about that account. We'll share our email ID, sir. If someone not giving FATCA declaration, how can we report it? If you know that the client is a non-resident, you anyway report it with the whatever information you have and mention it as undocumented. There's a 61B, there's an option to say undocumented. And the moment he gives the FATCA declaration, you can turn it to documented. If for undocumented, you may have limited information. For example, you may not have place of birth, or you also may not have country of birth for that matter. So all that certain information, TIN, for example, you may not have TIN. So you can report it as undocumented. If they do not if there are any instances where you have, that the client is a non-resident, but he is not giving declaration and he's declared himself as a resident, you can block that account. You should block that account for not providing you the information. I'll take the next one. If an Indian client based in India does trading on NYSE through internet trading, does he have to be reported? No. Here, whatever business he does, it doesn't matter, sir. What matters is whether he is reportable by virtue of his tax residency. If you have filed nil report last year and to the last year, and this time we need to change that previous year, yes, you can. There is no fee charge right now. Have filed it but now for understanding that needs to file CRS, then can we go previous year? Yes, you can. Same question. Yes. I've taken up all the questions until now. Are there any more questions?
There are no more questions.
Okay, so someone has written AR is annual report. I was just going back to that question. Hold on. Yes, FATCA CRS is annual reporting, sir. Annual calendar year reporting, if that answers your question. That's all from my side, sir. I guess there are no more questions.
Okay. So there are no more questions, and thank you very much, Mr. Kalia, for this presentation. And we will share your email ID and your contact numbers with all our members who would like to get in touch with you and to seek your assistance and guidance in the matter.
Sure. My humble request is please share my email ID. It will be very difficult to attend all the calls.
Yes.
So only email ID, please. Thank you so much.
Yeah, we will. Please do share your email ID, and we will ask all our members
Sure.
to connect you with you on the mail ID so that you can send
Sure,
your
Sure,
responses.
sure.
Thank you very much for.
Thank you so much. And all of you take care of yourselves and of your family. And we hope for your good health. Thank you so much.
Thank you.